Hey everyone, Stats Traders here, and in this video I'm posting two of my trades. I think in these few days I made a little over $1,500, and the tickers were CEI, and also that was the dip buy, and the second one, it was VYGR. So with the CEI, I'm just gonna go ahead and first just do a recap of what happened with the stock. So this stock has been on a run for for a few days. It went up a lot here from 150 to almost $5 to 485, and this overall gain was over 1,000%. So I was waiting for this stock to crash because I looked up at some fundamentals, and it's a really kind of sketchy company. They basically, their only stake in the company is they own 70% of another company that is like kind of super shady, and it's like an oil exploration company, and it's actually OTC company, so over-the-counter company. And this company, they failed to report. They failed to do their quarter reports or something like that, and they actually fired their accounting firm who does all the accounting for them. So, great. I was just anticipating for this stock to crash, but I was not shorting it this day. But this day I was actually looking to dip buy the stock, and so it went from $3 all the way down to $1. And I bought it, and I made a little over $1,000. And there is a recording of all of my trades for this stock. But first, I just need to tell you that I didn't record the whole trade, because you see this is the halt. So it halted at 1 o'clock, 1:20, and then it reopened an hour and a half later. And of course, when it reopened, I wasn't there. I set my, one of my accounts, I set my limit order, so it sells at market, and another one I kind of let it to run, so I closed it around here. But overall, I made over 1,000 on this trade, buying this dip and this dip here. So how would I know that this stock is gonna dip exactly here? So I've prepared something for you guys. Just a second. So this is my large cap dip buy spreadsheet, and I blacked out all the data because I don't want to give stuff away for free. But there's this thing that's called conditional formatting. So the way you use it, you basically highlight the cells that so you give a cell a criteria, and if it fits the criteria, it's going to be highlighted in the cell. So basically what I did was I created a formula that pulls the decline, the parabolic decline, which is which is this. So this is called parabolic decline. I want to know what's the bounce is going to be after the parabolic decline 50% or more. So that was my idea here. And then I took this bounce. So all these cells, yellow cells and red cells, they're basically highlighted cells of the falls that were 50% or more. And then I took the bounce. And what I've noticed was something really fascinating. I've noticed that every time a stock drops 50% or more, there's a really big chance that it's gonna bounce at least 70%. So that's why here this decline was a lot. So here it went down almost 80%. So from $3 all the way to $1. Yeah, I think it was around 70% drop. And that's when I knew. So I bought partial shares. So I didn't buy it here. I bought here, and then here, and then here, and I got this really nice spike, and that's how I was able to make money. And if you see here, it bounced from $1 all the way up to 173, which is exactly 73%. Which is why I tell you guys, track data, don't be lazy. It's extremely important. It's gonna give you an amazing edge over everyone else in the market, literally. So that's what I did, and that was a pretty easy $1,000 trade, except for this halt where I went to eat in a restaurant, you know, because I didn't know where it's gonna open. So just kind of, I was like, well, I was kind of tired of this because I was waiting for 20-30 minutes, and then I just kind of went on with my business. And yeah, so that was the first trade. And then the trade that I did today, that's this stock right here, VYGR. And I know it kind of looks like a sideways movement, but you know, if you have your data, you have your statistics, you're still able to make profit even from all this nonsense. Because if you look at it, it opened here, it closed here, so it basically didn't move. Well, you know, and when most people just see this random movement, I see patterns. And so I was still able to make a little over $400, which put me over 1,500 in 2 days. And yeah, the next few videos are gonna be the recaps. So go ahead and continue watching if you want, and ask me any comments. Alright guys, so this is today is October the 6th, and I'm shorting this stock, VYGR, and so it's crushing. My average price is somewhere around here, so I was shorting this spike, and so far I'm up 104, and I'm only shorting let me see, I'm only shorting 1,000 shares, and there's a nice spike, and I'll be adding into these spikes. Nothing much, just a few hundred shares. I'm adding another 200 on this spike. Let's see how it goes. So I'm back to my break-even point. So I'm totally shorting. My total is 1,200 shares. And I hope it crushes. And if it keeps spiking, I'll be shorting more. But this particular market cap and float, they're very dangerous, because statistically with this market cap and float, I have the lowest win rate. So that's why I'm kind of very conservative, because that's number one reason, because you know, you track your data and you figure out like what you're good at, and also you understand that under certain conditions the stock just doesn't create enough range, and in these cases you need to be extremely careful when you're shorting something, because short or long actually, because when you get in a trade, you need to calculate the range at which a stock can create. And this float is very tricky, because usually, so actually I got these shares for free, practically free. It was $2. It was easy to borrow, so it was $2 for 100 shares. So I paid around a little over $20 just to borrow. It's extremely low, and what I've noticed is the cheaper the shares are, the less range a stock is going to create, and the more competition there is. And then you see something like this happens. There's a lot of people just jump in, they look at all these free shares, and they want to trade it. And let's see, it keeps spiking. And if it spikes more, I'll add more. And you see this huge spike. I'm down 100. 143. And also I'm reducing my risk for this particular trade. So let's say my normal risk is around $500 or $1,000. For this trade, I'm definitely going to be on the shorter side. So I'm going to actually throw another 100 shares. Yep, added another 100. And it's totally possible it will keep spiking. That's just kind of the movement for this float. So I'm just gonna keep watching and adding if it drops. And massive spike. And I'm down a few $100. I'm just really waiting for this big pullback so I can add some more. But there's no pullback inside, so I'm just waiting. It looks like there's some kind of pullback, but not strong enough. I'm waiting for something like this, so I can totally just keep spiking, which it does. Oh, that's a nice pullback. That's actually a very nice pullback. Very nice pullback. And I'm back to green. And up $170. Let's see, now it has to close like really strong. And it did. But still, I don't get my hopes too high, because normally I don't do very well with these kind of market caps and float. Just kind of waiting. And if you guys know like what I mean, go ahead and look at the stocks like XENE, RCAT. I did not do very well. That's why and these were the very similar conditions where the stocks just didn't create enough range. And this is kind of like what I'm anticipating that's gonna happen with this stock. because generally stocks with this float and market cap, they can trade a lot more volume than I'm normally used to. Because if you look at the micro float and lower float stocks, there's a certain range that the volume that it creates, the volume that's created on the day, and also the volume that is traded before a stock drops. And in these floats, this stock like VYGR, XENE, RCAT, these stocks can create, percentage-wise, they can create lower range, but they trade a lot more volume. See? And if you think about it this way, the float is basically a stock supply, and it's harder for a stock to drop when it has a higher supply. Thus, it doesn't really create enough range for you to short into, percentage-wise. And so you don't get enough range. But at the same time, it can also spike because you just have competition on the short side, but not as much on the long side. So that's the problem. As you can see, we kind of stuck in this 380. I don't really I don't really believe in like support and demand. There are certain strategies with support and resistance. Sorry, I don't really use it too much because I found that they don't really work. And the same thing, as you guys can see, I don't really use any indicators either because they don't really work. And me, in the past, I was a financial economics major. Basically, the whole major was related to math, statistics, and the stock market, and the stock market was in particular. So we did a lot of studies, and there was this class where we did studies on the indicators, and we ran just historical data to see how these indicators perform over time. And we found that most of these indicators, like RSI, MACD, they work like roughly 33% of times on large historical data. And so that's why I don't use any of these indicators. And I don't suggest using them. Just stick to supply and demand of a stock. And if you throw statistics in there, you really get the edge in trading. So see, it's kind of stuck. Actually, I can maybe add some more, but I don't really want to hurt my average too much. But if it spikes to like 4, back to 4, I'll definitely add some. I'll throw a few hundred more shares. But so far I have 1,300 shares total short. And mind that every market cap and every float has its average volume that can be traded on a day. And its max volume also. So there's definitely limits to the volume that can be traded. And if you look for some market caps, like more like large caps and higher float, they can trade the most volume. That's true. But also, we need to realize that the market kind of slowing down right now. We didn't have too much crazy volatility. And I'm up to $65 for now. 230. And again, what's my target? I don't really know the target yet. It depends how fast it's gonna keep going. There's also this thing where the faster it drops in the first few hours, the higher the possibility of a bounce. And it's not like a metric that I track, because that would be just a nightmare to track in Excel. But that's just something to keep in mind when you're trading. And again, see, like I'm only up $300, which is not a lot at all by any means. I'm not really sizing into the stock because I know that the stock can definitely reverse into me anytime, and then I'll need to cut my loss, but I'm fine with that. Normally I would trade probably something like 2,000 shares or more, so I would be up around 600 by now, which is a lot more exciting. Now I'm just kind of observing the action. And we're up almost we're down almost 10% from its open, which is pretty solid in the first 30 minutes of the market. I'm kind of stuck at 370, but so far so good. I'm actually really satisfied with the stock performance now. It's crashing. I'm gonna show you the daily chart. So that's your daily chart here. So far so good. And it's crashing. It looks like it's gonna crash. And at the same time I'm looking at the level 2. Also something, I don't know if I've ever talked about it, about level 2. Level 2 is more like it's not a definitive factor when you try to size in a trade, but it definitely helps, especially when you trade lower float stocks. Because in a low float, meaning low supply, whenever you have a big bid or ask, you kind of know that, okay, this is the buyer or seller, and the market can reverse, the stock can reverse from there. But with this with these mid floats, it's kind of hard to judge the size on level 2. I know there's a lot of people who like read level 2 and stuff, but I'm not one of them. I just stick to statistics, stick to my data, and the first thing is basically not hurt my average. So I only try to size either on spike or when I see that it gets denied on a reverse. But I never really chased the stock, and every time I've chased the stock, I've always suffered. So I'm up almost $400. Nothing crazy. Just, weekly salary for most people. Just kidding. Dang, that was probably a bad joke. I'll probably cut it out when I edit the video. And we see a bounce. But you see, the more volume is traded, right? So you see here, it's trading 80 million volume. So the more volume it's trading, the more comfortable I am that this stock will keep dropping. Because again, there's limits on each volume. Well, it's not like a physical limits, but over time you track these volumes for all your setups, and you kind of get the idea what's the lowest volume that can be traded, what's the max volume, and then you kind of adjust it to the season so you can kind of estimate. So for example, for gap up short, if it was like December or January, we'll be trading around 300 million volume by now, and then my sizing strategy would be different, but it all kind of comes from experience and the data that you have. So I'm not really gonna talk a lot about it but now just stick to the averages, to normal volumes, you'll be fine. And I'm up 400. Let's see if it keeps crashing. I don't know what else can I say. Just waiting for the stock to drop. And at the same time, I'm looking at some other stocks. There's really nothing is happening. And I'm looking at the OTC, the over-the-counter stocks. These are also very fun. But there's really no volume, no anything in the OTCs or pink sheets. And definitely I'm not looking at the overall market because the SP 500 index, SPY, NASDAQ, I don't really care what happens with them because all of these stocks that I'm trading, they don't really correlate with the overall market. So in my personal experience, these stocks, when the market is hot, when let's say Nasdaq or SP 500 goes up like few percent a day, there's just more plays like this. It just like you have more setups to trade. So it's generally better for me when the overall market is going up. But the thing is, when the market is crashing, it's also very good for me. Like, the other day, yesterday, the market, and also the day before yesterday, the market was down, I don't know, 2 or 3%, something like that. When Facebook shut down, Facebook went down 6%. It's a crazy day. So there was a really good dip buy. And so yesterday I made, on my personal accounts, I made over $1,000 just one day. It was a great setup. And so when the market is crashing, there's a lot of dip buys or any kind of buy strategies, different kinds of dip buys, with like OTCs and large caps, mid caps, all across the board. It's just better to buy because you basically buy in panics. And whenever you go long on a stock, it's risk reward wise, it's a lot more favorable. It's just how the math works. So when the market is crashing, it's better to dip buy, and when the market is going up, you'll have a lot of these short opportunities. And looks like it's spiking. And in order for me to add, it's also something that comes with experience. In order for me to add to a position, I really want to see this strong push. Because every add, so if I'm adding on the way down, I'm basically shooting myself in the leg because it's hurting my average. So let's say I entered on this spike here, right? And then it drops and I add here, and then it spikes again, and then drops and I chase it and I short here. My average will be shifting. So like from here, it will shift to here, and then here and here, and then it will shift as much as here. So see, now I'm up almost 300 and the market didn't even bounce back. But the thing is, if I keep adding on the way down, I'm hurting my average. And at this point now, my main goal is to not hurt my average. That's the only thing I care about. I don't care about levels. I don't care about indicators. I don't care about any news. I have a laser focus on my average position, and all I care about is not hurting my average. See, there's some kind of a good spike now. And it's still spiking. That would be great if the stock just denies the whole spike and goes lower to like 350. If it does that, I'll probably cover everything. I'm gonna actually pause the video, not to make it too long. Okay. And we're kind of stuck at 370. Nothing's really happening. But the thing is, I'm really looking forward. So if the stock doesn't spike in the next few hours, that's a very good sign that it will keep dropping, because the most of its volume stock usually gains in the first few hours. So that's what I'm looking at. Just waiting for this 11:30 a.m. New York time. And then it will probably just keep crushing. And in the meantime, I'm just opening my Excel, looking at the averages, if there's anything I've missed. Oh, look, it's dropping now. It's a perfect scenario. I like when the stock is very simple to trade, like that. And I'm up 395 for now. $400. Oops, sorry. 421. So yeah, 1,300 shares. My average is 392, so way up here. That's when I was adding it on spikes. And I'm always waiting for the spike. So a lot of people just short this, the setups from the open. It works for them. For me, I try to get the best average possible. That's the only thing, just focus on the average. Let's see if we can break through 350. That would be nice. And again, a lot of people will probably see the what do you call it, the double bottom or something. And they're all gonna lose. Whoever buys the stock here is gonna lose. Still a long way down. Still a long way to go. And looks like it's crashing through 360. It's a very good sign. I'm up 421. No, gets denied and going back up. Yeah, gets denied. It's okay. What's happening there? So look at it now. So my average is 392, but let's say I throw in just 100 shares more. So 100 shares short. See, so my average has shifted a little over 1 cent down. So it was 392 and now it's almost 391 with just 100 shares. So I can sacrifice just 1 cent of my average. It's not a big deal. But let's say if I shorted another 1,400 shares, I wouldn't be in a good spot, because my average now is going to be somewhere here, and it keeps spiking. Let's see what it does after that. It's a crazy spike now. Going back, and I'm actually be adding 78. If I should be adding some more, I'll add just 100 shares more. So my total is 1,500 shares. And my average is almost 3.9. So right here. And look at that. It's not crushing. And then there's this little bounce. I'm still in shorting, still 1,500 shares. not covering anything. I'm just trying to make this YouTube video not too long. So I'll be pausing the recording so that when I upload the video, it's not like it doesn't take me like 7 hours to upload. But yeah, nothing really happening now. Spiking. So market update, there is a bounce and now it looks like it's denying. And what am I doing? I'm just kind of chilling, watching reels with Joe Biden and the funny things that he says. I find it incredibly funny. So, you know, when the market is stuck like that, you gotta stay focused, but at the same time, don't get too serious. And it's not dropping yet. And it just keeps spiking. Nothing's really happening. It looks like this is a big drop now. I'm looking at level 2. There are some good offers. Maybe it's the beginning of the crush, I don't know. I'm just kind of looking still. Then I'm just crashing. This could be a good. Oops. And it's still, so the update, it's still spiking from its low, 357. It's up to almost 4. And I'll add maybe another 100 shares if it goes to 4. Actually, I'll add 100 now. Let's do 200 if it gets denied. So I'm looking at level 2. No strong pullback, so I'm not gonna add. Plus $40. I'm really just waiting for this big pullback, something like what happened here. That would be best for the stock. and I'm in negative. And just keep spiking. Negative 152. I'm still looking for this strong pullback. I think I'll add a few hundred more, just 200 shares. So 1,700 shares now. And if it spikes, I'll be out with the loss. But it's okay. Just part of it. Statistics, you know. But we'll see how it goes. And we're back in business. We're back in business. Look at this. It's crushing. I'm back to 100 with 1,700 shares. And my risk is going to be around 412, 415 probably. And I'll probably close around here, around 350 or something, but we'll see. And I'm back to 200 profit. I swear I hate these mid float stocks. They always do something like this. Micro floats are a lot more predictable. But let's see how it goes. And I'm back to 326. Let's see how low it can go. Actually, I was ready to lose money on this trade, but let's see how everything changes. It's very dynamic. And I think I might be out, so I'm gonna close my 1,700 shares. And so my realized profit for the day is $411. Not too bad, considering that I was ready to lose the money today. And now I'm done for the day. Pretty hard day. You know, this stock didn't do what I was expecting it to do. So now, well, I might go. Actually, yeah, I'm gonna go to the Apple Store and, you know, get the new iPhone. I've been wanting to get it. Yep, that's what I'm gonna do. I'm gonna go into the Apple Store, guys. Have some fun today and See you guys next time. Alright guys, so this is the October the 5th. The stock ticker is CEI, and it halted. It went down from 3 all the way to 1. And let's see how I do it. I'm gonna try to dip buy it on the bounce. But 1,000 shares. Sorry, it was 100 shares, but this is the bounce. Got 2,000 shares. Let's see how it goes. Typically when you have this huge drop, 70-80%, that's when the biggest bounces happen. And the volatility is kind of crazy now, but let's see how it goes. And it reopens. Looks like we finally have a bounce here, but I'm still in negative. So let's see how it goes. Anything can happen still. And we're bouncing back. Let's see if it keeps going. It's already up 24% almost from its lowest point. And usually with these stocks, the drops, if it drops 60%, it can bounce as much as 40%. So this would be my price target. And it halted again. And I'm pretty confident with this trade. Why? Because usually from its lowest point, I've just looked at my statistics. It can actually bounce as much as 60-70% from its lowest point. So my real target could be around 160, but we'll see the price action, how it goes. For now it's just halting, but these kind of trades don't really happen very often. This is probably the first time. And it reopens, and it's kind of dropping now. We'll see how it goes. And it's bouncing. Negative 65 now, and my price target should be around 160, but I'll see how it goes. And you see there's a wall of sellers here. If they get taken out, we can keep going further at 30. There's still a long way up. And again, the same wall of sellers at 130. Let's hope they get taken out. Yep, they got taken out and we're going up. And I'm finally up 25 bucks. Let's see if we can make more. So I remind you that this stock is up only 35%. According to my averages for this kind of setup, according to my data, it can bounce as much as 60-70%. So from its lowest point, so from 103 to 1.7. But let's just keep looking how it goes. Still a very long way up. So I'm not covering, even though I messed up on my entries here and here. Could have waited for this other dip. But don't worry, I bought it on my other investors' accounts with a lot more volume. So I'll be good. Looks like we have a first pullback. I'm not covering yet. And the bounce continues. Let's see how it goes. it's a pretty strong push, and it can definitely head to like 150. And we're pushing for the new high of this bounce, close to 137. Still gonna wait. Plus 100, nothing huge for now. And we're really pushing towards this 150. And the stock is still going up. We'll definitely see some resistance at 150, because usually people put like their orders to be executed at 150. But these people don't track statistics, you know. They don't know that these kind of drops always bounce 60-70%. So I'm gonna wait till 160. And we have a pullback. And we're really going towards this 150. See all the sellers get rejected. But for now we have this huge seller at 142. And I just hope he gets taken out. Another 200 profit already. Nothing huge. Let's see how much we can make here. And I'm sure there's gonna be a lot of takeouts at 150. A lot of covers, I mean. But I'm pretty sure it's gonna keep going. And we're kind of stuck at 145 with this huge seller. Let's see if it gets taken out. 46. And for now, there's no big sellers, just 148, and he'll probably get taken out. He's already getting taken out, and it holds at 151. Perfect. And it's gonna hold. It's gonna hold for another like 5 minutes at least. so we'll see later. I'm gonna pause the video now. And it's about to reopen. Usually these holds are like 5 minutes, but they can be more. And if it's not 5 minutes, then it's usually 10 minutes. And if it's not 10 minutes, then it can be 20 minutes. And if it's more than 20 minutes, it can be like 1 hour. And then I've seen holds for like 4 hours, 5 hours, but they usually don't happen. And this hold is actually, it's a little different because there's different kinds of holds. There's the volatility hold, but this hold, I just read the news. That's what it says here. Camber Energy shares halted on code news pending. So that's a different kind of hold. And I don't know what kind of news can come out. They can say anything. They can say, oh, this drop was just a panic, and then we're gonna see these shares go back up, or I don't know, if they do the offering, then we're gonna see another drop. So anything can really happen, but yeah, we'll see. But most likely, I think they're just gonna come out and say, you know, we had unreasonable volatility in the stock and it crashed for no reason, and then most likely we're gonna see an upward movement. So let's look at the daily chart. So if it dropped from $3.03 all the way down to $1, and it can definitely bounce back a lot. It's already up 51% from its lowest point. And it's 11:18 now. So this hold has been in place for 10 minutes already. And something tells me that it's gonna be a very long hold. But I have to basically stay here. I can't really go anywhere because it can reopen at any moment and it can spike a lot, or it can drop even more. So that's why I'm just sitting here waiting. And in the meantime, while it's still in hold, I'm just reading some news related to the stock. Oops, what is this? Yep, so I'm just gonna spend some time reading this and try to understand why the stock dropped 70% from the open. It's not that I really care about the news. I really don't. I really never read any news. I'm trying to keep trading as simple as possible and just stick with my statistical analysis because that's what's been working for me. But sometimes, you know, when I have free time, I'm gonna read this BS article from benziga.com about the stock, and just to entertain myself. And I'll resume this recording as soon as the trading reopens.